Hello, welcome back to a very festive edition of the Listen Loan Let's Go podcast. It's the most wonderful time of the year, isn't it, gents? Welcome.
It is.
How are we feeling around Christmas time?
Very cheery.
It is very cheery. Do you like this time of the year?
I love it. It is probably my favourite time of the year, especially in Queensland. You know, the hot weather comes back around and I love to get out to the beach and just spend time with family. So
Absolutely. Well, Xavier, you were saying that it's not quite the Belgium Christmas that you once enjoyed, but nevertheless.
Correct. So getting in the chair is a little bit harder, but a lot more comfortable, I've got to say. So, I don't mind that there's no snow and we can head to the beach with the kids, for sure.
Well, we might throw to some Christmas-related questions at the end of the show, so the listeners can look forward to hearing your thoughts on all things Christmas. But before then, we've got to go to business first, guys. And, of course, things are always moving in your world. So let's start with a lot of people talking about trying to invest or the want to try to invest. Why is that?
Yeah, so first we need to cover what is investing these days.
Yes.
Because we got a lot of vestings. We've got investing, which is traditional, I suppose. A lot of people have had an uplift in the equity in their home, and so that gives us an opportunity to leverage that and either upgrade the house or buy an investment property. So there's a lot of people doing that. There's obviously the rent vesters, so rent vesting, which I believe we've briefly mentioned in a previous episode, where you might not want to buy where you want to live, or maybe you can't buy where you want to live, and so you're renting and investing somewhere else. New trend, nestvesting.
Yeah, what's that?
Yeah,
I haven't heard of this.
So it's similar to rent vesting, except for those who are still at mum and dad's.
I thought that's what it might allude to.
Right?
Yeah.
Stay at mum and dad, not pay for the food or the rent, and save a deposit and invest that way. So we've got a couple of clients who are doing very well doing that. And a term that I've and that's probably the main one that we see is apparently there's homevesting, which we'll cover in a bit. It is about using the equity in your home to then leverage out. I think it's a US term, but we went into the vesting part. Yes. What does it mean and how do we do it?
So I just want to quickly touch on nest vesting again, because that is pretty interesting. Do you see that being quite a big trend in the future, especially? Will that be something we see a lot of?
Actually, it's quite smart. Like
absolutely.
If the kids could stay 2, 3, 4, 5 years longer at home, I'm not saying my kids can do this, and save their bums off and a deposit or two and get into the market, they'll give them a leg up big time, right? So it's pretty smart to do. From a finance point of view, if you don't have rent, we do have lenders that are happy to count it that way, so that also increases your borrowing capacity. So not only can you save more and save faster, but you can increase your borrowing capacity whilst you're doing it. So pretty smart.
Yeah, wow. Now, interesting word here, parent vesting. There's another vesting. What's going on here? What's parent vesting?
I suppose parent vesting is when the bank and mum and dad, I suppose a lot of other people like to call it, but there is another one that people don't also really know, is that you can actually borrow with your parents as 3 parties on the loan. So if you weren't quite ready to buy or you didn't quite have the capacity, your parents could also help you out as being parties on the loan. So whether that be just for you to build, a granny flat on their existing property, or if it is to go out and buy another property for yourself, and they could definitely be on the loan to help you out with that in both servicing and deposit. But there's definitely many ways.
Are you guys seeing this? Is this coming through with some of your clients, or is it?
I'm definitely personally I am. I've had quite a few clients recently. Some stick to the traditional guarantor, which we know, but there has been definitely a few that are looking to come on with their parents and sort of buy a property together, whether that's be an investment for the parents and they get to live in it, or those sorts of things.
And I suppose because there has been this year anyway pressure on borrowing capacity, so some parents want to invest and maybe can't do it on their own, and the kids either. So it's a good joining forces to get a bigger footprint in the property market. Yeah.
Putting your dad hat on for a second, Xavier, apart from trying to get the kids out as quick as possible, which I'm sure might one day be something you're keen to do, what would you advise your own kids or kids of that age, looking at the disco ball in the next 10, 15, 20 years?
Look, I believe that capital growth in property is going to keep going.
Yep.
So we've got a growing population. Australia's really trendy, sexy globally to live in, and life's good here. So I don't see that stopping. For me, anyone who can get in the market, and the sooner they can, the better. Be careful what you buy, but what really makes money for you when you're in property is how long you hold the property for. So we've covered before that properties double in value, depending, do we have a COVID episode or is it a longer cycle? But either way, it doubles in value.
Sure.
Right? So the earlier you start, the more doubling you get.
Yep.
Simple.
Makes sense.
Yeah.
Should parents be starting to think about this on behalf of their kids? Like start thinking, because obviously it works both ways. They get an investment out of it too. Should the listeners and viewers of this show that might start having kids or have got kids?
Sure. I mean, what I would say is for those parents who are wanting to invest and can't quite do it on their own, and if they have kids that are getting to that stage in their life where they start to earn money, it's probably a good idea for both the parents and the kids to stretch that extra property together, then not do it at all.
Yeah, makes total sense. Now, okay, so let's break it down a little bit. So what actually is the process when kids do buy with mum and dad? Let's go from start to finish almost, so we can break it down for the viewers and listeners.
Okay, so when mum and dad, if they already have a house, or if they don't, I suppose it's two different sort of strategies. If they already have a house and they're looking to sort of buy an investment to further their portfolio but also help their kids, they can use the equity that they've built up in their property, which is essentially, as Xavier said, the property grows and doubles. They can use a portion of that to help the kids along with their incomes to help service this loan in future. So you sort of have some lenders will allow you to have the double whammy where you can have that money as well as the serviceability with the three parties being mum, dad and the son or daughter.
Yep.
And they can all go out to buy a property together, it being an investment for mum and dad, and then, the son can live in it and pay rent, or not really pay rent, he's paying off his own mortgage.
So mum and dad's house provides the deposit in the equity bit, and then parents and kids both contribute to the borrowing capacity, which they can't do on their own. Yeah.
We've spoken on previous episodes about ease or difficulties of people buying. Where does this sit? This kind of approach sit within the scale? Is it the more easy side or the more difficult side for people to?
No, it's easy.
Easy, yeah.
We can make it work. This is the magic, right? So, I guess it's about trying to help people to get in the market and ride that wave, right? So if mum and dad or the kids can do it on their own, do it on your own. If you can't, then it's better to do it with someone than not do it at all.
Get started.
If you can do it with your own family, then even better. Now we see, so that would be a good story about investing together, but sometimes there's buying together that's more a necessity, right? So what we're finding out there too is, here we're talking about investing, but some people have to get together just to buy something, right? So, and this has been, pressure of cost of living, borrowing capacities. For me, it's better to own something than not own something. And so people have to do what they have to do. We can certainly help figuring out the moving pieces, how we get them in the market over the line. And this may not always be the ideal property either. It might be a stepping stone property. But it's better than sitting on your hands, not doing anything, waking up 10 years later and still being nowhere.
Yeah. Building the granny flat is actually pretty interesting, because I don't know if that's probably more long-term thinking for people, because I'm sure the kids probably don't want to live in the granny flat at the back of their parents for too long, and I don't know how long the parents might want that either. So is that a smart way to go down? Does it actually add value to your property in the long run?
I would say it definitely does add value to your property. Obviously, every counselling is different in whether or not you can do it, but if you've definitely got the land and space there, it definitely does improve your resale value as well, because not only that, is you've got to think if the kids aren't going to live in there, and then you're happy to have someone else live in that granny flat, they can help pay off your mortgage as well. So I think it's really a win-win.
Yeah, and it is a trend we're seeing, whether it's actually we're having a conversation with Christina, our marketing manager, yesterday, saying that her daughter's already talking about putting a granny flat in the backyard for her.
Yep.
And the daughter can live in the house. So, it can flip on you
That's
quite
exactly
quickly.
right. It absolutely can.
But generally, what we're also seeing in terms of an investment trend there is if you've got a property that has space in the backyard and you can put a granny flat, you can increase your yield quite rapidly. So you've got to be careful. Granny flats are not all equal.
Yep.
Some are built on site, some are built off site. There can be complications in finance with that. But generally, you're finding typically that, you might buy an investment property for 800,000, it rents for 700. A granny flat only costs 200,000 and rents for 400. So the yield on a granny flat is great. And if you add it to an investment property, it probably helps.
Yeah.
Not only value, but also cash flow.
If somebody does have a bit of land, and I know this might be a little bit outside of what you guys talk about and teach, but if they have a bit of land and they want to increase the value of their property, what's the best way to go down? Is it granny flats? Is it a swimming pool? Is it an extension of the property? Or is it how long's a piece of string?
Yeah, so it's more horses for courses,
Yep.
I suppose. It depends, as Jack mentioned, different council, different rules.
Yep.
Although we are seeing a lot of council relaxing that. If I go back on the Gold Coast, probably 10 years ago, the minimum size block the council wanted to see was 800 or 600 square meters.
Mm-hmm.
They're down to 400 now.
Wow.
And I think if you've got an 800 square meter block, you can put a granny flat on it, which never was the case. So as the density of population is going up and councils want to spend less on infrastructure, then they're relaxing the rules so that you can do more.
Sure.
So it's really depends on your particular situation, and it's not all about money either.
Yeah.
A pool is a emotional investment.
Yeah.
A granny flat less, I suppose.
Yeah.
So
Perfect.
yeah.
Good way to answer it. Now, can you buy a second property with no deposit? That's a common question.
I think, look, it is definitely possible, and this is sort of ties back into what Xavier was saying before with the home vesting, and it's something that we've seen quite rapidly over the last few years, but when we're talking about doubling of property prices, we're usually talking 7 to 10 year time frame. But with the rapid FOMO and the missing out of COVID over the last 4 years, a lot of people have a lot of value that they don't quite understand, and they don't know that their property's growing by quite a lot. Now, when your property grows in value, you build something called equity, which is the difference between your home loan, the value of your home loan, and the value of the house. So you can actually withdraw on your property, if you can service the loan, up to 80% of the value. So that money then becomes available to you as a deposit for your next property.
Gotcha.
So it is really a smart way, and I suppose it's a thing we sort of come back to touch on, is we can help you discover the value of your property now and see if through strategy if we can actually do that for you and purchase your first, second or third investment, depending on where we're sort of looking to go with that.
And we're seeing that a lot, especially on the back of COVID, because it was a rapid equity increase, right? So there's probably two main scenarios maybe three, but two main scenarios we see, which is one, we bought a property, it was great, but it's not that great, really. How about we make it an investment, buy a better property? So we're doing that a lot, converting the home into an investment, buying a better home. For some others, we're actually using the equity and just buying a property. We do have some investors who are buying the third, fourth, fifth on the back of the equity that's been built in all the others. But we see plenty of that at the moment.
Yeah.
People are realizing slowly that not only have the equity gone up, but when your equity goes up, it means the price of your property's gone up. You made a ton of money, basically, and you want to do it again.
Yeah.
So we get a lot of inquiries like that.
Well, I'd probably encourage people. It makes sense for people to know these facts. That's literally under their roof. They should come and have that discussion with you guys and see what they can do.
Well, it's logical, as you say, and human, right? If you do something and makes you a lot of money, do you want to do it again? Probably.
Absolutely,
Let's
we do it again. Yeah. Okay, so some people have multiple investment properties. How can they do that? Is there a lot involved?
No. Well, yes and no. Firstly, Rome wasn't built in a day, and I'll stress this out because we do get people saying, I want to invest, I want to buy 10. So okay, how about we buy one? Let's start with that. And usually that's the investment journey. You start with one. We tend to make it fairly easy to build a portfolio and to keep growing it that way. But there is a lot involved, isn't it? Like we're pretty adamant on how a structure should be, whether the property should be tied together or standalone. How do we put buffers in place and safety in place in the portfolio so that over time there's no issue, right? So the answer to your question is yes, it's simple, and I hope that all our clients are saying how simple it is, because behind the scene we put all the work to make it that way.
Yep.
If that makes sense, yeah.
So, and I like what you just said, because I would assume that's how a lot of people think. Once they dip their toe in, they're like, oh, now I want 10 or 15, or I just want to go. Excuse the pun. But
let's go.
Yeah, let's
like
go. Realistically, and in more of a smart way of doing it, if it for the person that is ambitious that wants to own, let's use a number 10. They want 10 properties. What's the time frame from, say, property 1 to buying then property 2, and then does it then speed up over time to how you can realistically do it?
Yeah, look, I always say the goalpost keeps moving, right?
Yeah.
And it's because of some of the attributes of the investor. So how much rent they're collecting, how much they're earning, did they get a pay rise, a new child, situations change. But regulation and market as well. So banks change policies, the government changed regulation. So it needs to be constantly reviewed.
Yep.
Right. So we try and look at when and how can we do the next one, just like you mentioned. When we've done that, then we'll look at the next one. There's no guide. There's just perseverance.
Yeah.
We need to check valuation on a regular basis, check borrowing capacity on a regular basis.
Sure.
And we're sitting now on, it's funny, we talked about in COVID, they were talking about the rate cliff, right? And that was all these people who were lucky to have a really low rate, like 2%, or I think 1.98 is as low as we got. And that was ending, they were going up to 4, 5, 6%. I feel like we're on a cliff now where the interest rates, they're going down, right? When the interest rates go down, then things change. Borrowing capacity increases, and so the opportunity for investors. So we try and be a step ahead of that and have those conversations. And there's plenty of investors in the last year or two that we've said, you can't. Your borrowing capacity is not there. But in a year or so, we see rates going down, your rent's going up. So suddenly we're creating more borrowing capacity room. Right, and we just have to monitor that until we're good to go for the next one.
So exciting time for investors coming up.
Exciting time for investors, yeah.
Definitely so.
Any time frames you can give us and when we can expect?
I'll try this, right?
Oh, here we go.
When's the best time to buy, Jack?
Right now.
Yeah. Yeah, I thought that might be the answer. But Xavier, your predictions so far on this podcast have been pretty spot on. So
I do have the disco ball with me. We keep it polished. So.
Okay, so capital growth is where you make the money, it says here. Investors fall over in cash flow. What can we do to improve cash flow?
Yeah.
I suppose there is a few different ways we can go about it. If we're not talking about what we talked about previously by, putting properties and extra granny flats on, that's always a way to go, but people may not always be able to do that. So we can always look at restructuring their current loan, whether that's taking the loan back out over 30 years to reduce your monthly repayments. Changing the rate type, so that's whether you're paying principal and interest, or we move to an interest-only period for a little bit to just boost the cash flow, or vice
Does that extend
versa.
your mortgage though, or not? If you start refinancing,
It does.
Yeah,
So it does.
It can, but sometimes it's a case of it's not as simple as asking that question, in the sense that if you're able to save on your cash flow and create cash flow room to buy the next one,
sure,
then it's
Different
worth
type of thinking.
extending.
Yep.
Or even if you're in cash flow, you've got a cash flow issue, and the question is, can we either extend the cash flow or get rid of the property? Extending cash flow is still a better solution than getting rid of the property most of the time.
Yes.
Right? So there is big taboos from the government. Don't extend the loan, don't. But at the end of the day, we need to have a look at what's more beneficial financially on the long term. And as you said before, we make money from capital growth, not from cash flow. So all we need to do is keep the cash flow in check. We're not trying to make money out of paying the loan faster. Like if it's an investment property and whether you pay it 28 years or 29 years, that's not going to make extra money. What's going to make the money is for you to keep it longer.
Sure.
Does that make sense?
Yeah, it makes total sense. But it is interesting hearing, again, we cover this almost every episode where we hear speculation from media or banks or whatever versus kind of what you guys are seeing.
And I want to add to that too, like in doing all that, there is still one basic fundamental rule, which is review your interest rate.
Yep.
Right. And the amount of people out there that are still stuck in older loan, what I'll call legacy loan and legacy rates, just because they don't look. There's still a lot of it. We just had a client last week, 2 investment properties. We're going to save them 1% on both loans. It's massive. We talk about $15,000 a year. That $15,000 a year is probably enough, cash flow wise, to sustain 2 more properties.
Yeah, right.
Right. So yes, we're going to extend that loan. We're going back to interest only on 3-year term, exactly like what Jack mentioned, and that's going to give them a ton of cash flow back. They now got options of what they're going to do with that.
It's good to know that people that might have a cash flow problem, there's solutions potentially there. So how often should we review loans then? You just mentioned probably we don't, as a general rule of thumb, do it often enough. How long should the average person review it?
I mean, with us, it's a 5-star service all the way through. So we do have, when you come on with us, we have common review periods, and they're sort of every year. But if we're talking about people coming in now, I definitely say probably that 1 to 2 year range is probably when you should come and have a chat to us, because whether you're a first-home buyer and back to the equity, you might have all of a sudden got all this equity that you don't quite know about.
Sure.
We can definitely review your loan and possibly get you a better rate and move you out of that product that you're on there. But, I mean, yeah, that 12 months to 2 years.
But you guys do it without needing, you're taking the responsibility off that person to have to prompt to go, I need it, because I'm guessing the average person just doesn't think about it.
Correct.
Forgets about it.
When you're a client of Go Mortgage, you're part of the family, and we review your loan automatically every year. So we want to make sure that you're not left behind, and that a bank doesn't have the opportunity to take advantage.
Yep.
You're not alone when you're with Go Mortgage. We'll look after you for sure.
I love it, Xavier. I love it. All right. Now, I know for investors there have been new landlord laws. That's a bit of a tongue twister. Landlord laws. Does this affect your clients?
Yes, so it can. I think the push, especially I think New South Wales did it as well, but especially in Queensland, the push is to try and make rents affordable, and often government, knee-jerk. So they are changing the laws to try and stop the rent creep, I guess. But yes, some areas can affect our landlords. And in the latest iteration, I think what I saw is that they're making easier for tenants to be able to break a lease. Traditionally, a tenant would have to cover the rent until we found a new tenant and all the costs to find a new tenant. And the government just said that that's too much. But it's got the potential to create issues in, imagine this scenario. I've got an investment property, a tenant moved in 9 months ago, is now 3/4 of the way through his lease and decides to walk, right? Before he had to cover the rent until I found a new tenant and pay for the fees. Now the new law says all he has to do is pay 1 week and he can go.
Yeah, I have noticed that too.
Right, so now, as a landlord, it means that I'm going to be out of pocket because it might take me more than 1 week to find someone. Plus, I've got to pay the letting fees to my agent now. So I'm out of pocket. Not only that, but if I increase the rent when the tenant moved in, I can't increase it on the new one, because the other law that was passed some months ago was that you can only increase the rent every 12 months. and it's attached to the property, not the tenant. So because I increased my rent 9 months ago, I can't increase it again.
When did this law come in?
Right? So if my new tenant takes a 12-month lease, that's 2 years without a rental increase as a landlord.
Yeah, right.
So you will see how it all pans out, but there can be situations that create a bit of an issue.
So it's in favour. Is it because of the rental crisis, so to speak, and probably how people are so desperate that they almost could find somebody like that?
Correct.
Is that why it's relaxed?
Correct. So post-COVID, we had massive rental increases that followed the property price increase. And because it's combined with dwelling shortage that the government hasn't been able to fix in 15 years, then they're trying to fix it different way, which is artificial.
Yep.
And, well, we get into those oxymoron situations when that happens. So
Sure.
this is one of
Okay, interesting one here. Now, if you do want to invest, is there a first-time investor scheme available? And who has access to them? Is it similar to the first home owner grant?
Unfortunately for investors, there isn't really a grant out there for them.
Come on, Jack. That's not what we want to hear.
Look, it would be great if there was, but I suppose with this topic, it's really for those people that maybe don't fit into the scheme, because there are quite tight restrictions on those schemes and who does fit in them. So if you can't buy in those schemes, there is also a choice to look at maybe investing instead and doing one of those other vesting strategies we said, like rent vesting or nest vesting.
Yep.
Because if you don't fit in the scheme, then we always say we want you to get into property as soon as possible. And to do that, you may have to look at investing first, which we think is a good idea.
There is a scheme, though.
Is there?
Yeah.
What scheme?
The bank of mum and dad's still alive in some places. So you can, I suppose, use the bank of mum and dad, and some banks will do the family guarantee for an investment. So there still are options, but they're not government-driven. Unfortunately, all the government-driven investing schemes have been built for big end of town, not small mum and dad investors. So.
Well, the schemes, they seem to pop up quite regularly though, so we should always keep an eye on it, I imagine.
Of course. And look, if you want to get in the market, we'll help you find a way to do that. So,
love it. Now, we've covered a lot of topics. I'm going to throw some Christmas questions at you shortly, but before we do, is there anything else you want to cover that we haven't covered yet? No,
I'm quite excited about the Christmas questions.
All right, let's just do some quick fire off the top of my head. I'll go off the top of my head and off the top of your head. Jack, you answer this one first. Favorite Christmas movie?
Elf.
Elf, classic.
Die Hard.
You know what? I reckon I could have just about guessed that without asking that. All right, we'll throw to you this time, Xavier. Favorite Christmas song or carol?
Ooh, dear. That's is it Jingle?
What's this one?
Jingle Bells.
Jingle Bells.
I don't know if I have one.
Oh, come on.
The one that bounces around my head because I hear it on the radio all the time is All I Want for Christmas.
Yeah. We're going to be hearing that a lot over the next 30 days or so. Yeah. What's the worst gift you've ever received? Have you ever received a really crappy Christmas present?
I can't say I have. Socks and jocks.
Surely, Xavier, you've got something from when the kids were at prep or something and you get those little Christmas pop-up markets.
I got plenty of mugs and cups and socks, but you know what? They're all good intentions. I think the worst gift I got was a couple of people quitting just before Christmas, which meant I was working for the whole period. So
that is a crappy Christmas present.
That was a pretty crappy Christmas.
And what do you want for Christmas this year?
I can say a holiday.
A holiday?
I'll take one of those too.
Yeah. All right, and final one. What would be a nice Go Mortgage Christmas party? What does that look like to you, Xavier? I'll ask it as boss and then I'll ask it as staff and see if there's a...
Whenever I think about a Christmas party, I always think about a boat. So something on a boat, but that's just me. Yeah.
What about you, Jack?
I just think spending time with the team outside of work and sort of just still continuing to build that bond is just make sure everyone's available and, maybe some Christmas treats and those sorts of things there. But
you can tell he's only been here a few months. He's not stretching the budget too much yet, is he? I was expecting yachts and everything else that goes on.
Let's do that on a boat.
Why don't combine the both? Well done, guys. All right, we're going to give Jack, you're going to have one more crack at this. What do you type in on Google? What do you have to type in to find Go Mortgage?
Best mortgage broker on the Gold Coast.
Is that
Yeah,
the
is
tick?
that it?
That's it.
That's
Just Google it. Best Mortgage Broker Gold Coast.
And socials, Xavier, where can we find you guys?
Well, we are everywhere. So Facebook, TikTok, Insta. We could probably even find us on WhatsApp, Snapchat, and all the others. YouTube is a big one for me. I think we are unveiling a lot of tips and tricks on YouTube. So if you're in the market to buy property, you'll probably find a ton of good stuff there.
Well, hit that subscribe button. There's a Christmas present for the listeners then, isn't it? There's some
Yes.
goodies there. Well, everybody make sure you have a safe and happy Christmas period. And well done, guys. It's
Merry Christmas.
Merry
Thank you.
Christmas.
Merry Christmas.